COMEX has lost over 65% of its registered silver in the last 3 years, and nobody's talking about what happens when it actually hits zero, not running low, not getting tight, zero. I track the COMEX drain every single week on this channel, publicly, with timestamps. And what I'm seeing right now has never happened before in this market. Today, I'm going to walk you through exactly what happens when COMEX silver hits zero, day 1 through day 30, step by step. And I need to warn you, by day 14, the silver market you think you understand no longer exists. I publish my COMEX tracker every week. It's one of the very few public trackers on YouTube. If you want to see this data before everyone else, subscribe and hit the bell. Stay ahead of 99% of stackers. Before we walk through the collapse, you need to understand something most investors get wrong. The COMEX doesn't have one pile of silver. It has two, eligible silver and registered silver. Eligible silver sits in vaults, it meets the standards, but it is not for sale. Think of it like inventory in the back room. Registered silver is different. This is the metal available for delivery. This is what backs the paper market. When I say COMEX hits zero, I mean registered goes to zero. Eligible may still exist, but it's not being offered. 3 years ago, registered silver was around 150 million ounces. Today, it's closer to 35, 40 million ounces. That's not a decline, that's a drain. And the pace is accelerating. So what happens when that number hits zero? Let's walk through it. Day 1 doesn't start with an announcement. No breaking news, no alerts. It starts with a phone call. A futures contract holder stands for delivery, maybe a hedge fund, maybe an industrial buyer. They expect their silver, but this time, the metal doesn't arrive. Instead, they get a call. We're having trouble locating physical silver. Would you accept cash instead? This happens sometimes, but not like this. Not across multiple contracts, not across multiple warehouses. That evening, registered silver shows effectively zero. The spot price? Still calm. Mainstream media? Silent. But inside the industry, phones are ringing nonstop. Days 2 through 5 are defined by silence. No official statement, no panic headlines, because technically, cash settlement is allowed. So officially, nothing is wrong. But unofficially, everything is changing. Physical silver premiums start rising fast. Local dealers get calls. We can't guarantee delivery. Premiums jump, $8 over spot. Or $12. Online communities start buzzing. Traders notice, stackers react. But the spot price barely moves. This is the last window. If you're not positioned by day 5, you will pay much more later. I know what this sounds like. Extreme, unrealistic. But I'm not predicting. I'm describing how markets behave under stress. And I've been tracking the data that leads here. By day 6, the story leaks into mainstream media. But the narrative is controlled. Temporary delivery delays, logistics issues, that's what they call it. But experienced buyers know the truth. By day 7, industrial demand explodes. Manufacturers bypass COMEX. They go directly for physical metal. A factory doesn't care about paper prices. They need real silver. Production must continue. They will pay whatever it takes, $40 or $50 or $60 per ounce. Now the market splits. Paper price stays low. Physical price surges. Two completely different realities. By day 10, the gap widens further. By day 14, the paper price becomes meaningless, a broken signal. And here's the harsh truth. Paper silver products carry counterparty risk. When COMEX fails, trust collapses across the system. ETFs, unallocated accounts, all questioned. Only physical silver in your possession is truly yours. This is why I track COMEX every week. Because when this hits the news, it's already too late. Subscribe now. Stay ahead of the curve. By day 15, we enter unknown territory. Now bigger forces step in. First, the Federal Reserve. This is no longer just a silver issue. It becomes a dollar issue. If contracts fail, confidence collapses. The Fed can inject liquidity. But they cannot create silver. Second, the Shanghai factor. Eastern markets hold physical supply. While Western markets drain, by day 20, pricing power may shift to Asia. Shanghai premiums rise. Global benchmarks change. COMEX loses control. This connects directly to the weakening of dollar dominance. Third, government intervention. If silver hits $100, $150, $200, expect reactions. Price controls, export restrictions, new regulations. This is where timing matters. Early buyers are safe, late buyers pay the price. Preparation always beats reaction. So when will this happen? Tomorrow? Next year? Nobody knows. But I track key signals. Number 1, the drain rate. Right now, COMEX is losing roughly 1 to 2 million ounces per week. At this pace, critical levels could be reached within months. Number 2, delivery months: March, May, July, September, December. These are pressure points. Failures are most likely here. Number 3, Shanghai premiums. If premiums rise above 2 to 3, demand is overwhelming supply. Every one of these signals is tracked weekly, publicly, no paywall, just data. Here's the bottom line. The COMEX silver market is not stable. The numbers are not stable. And the price you see is not the real price. The real price is what you pay for physical delivery today. And that price is moving up. I built this channel to document everything with timestamps, with proof. So when this unfolds, the data is already on record. If this helped you, subscribe. I post weekly updates. I track COMEX. I break down the system. This is information the mainstream ignores. I'm the Stat Guy. I'll see you in the next one.